Hello and welcome to FANG Friday. I'm your host Gilbert Inanajer, Senior Equities Research Analyst here at Strategic Analysis Corporation. Ross is off today, but if you want to see more of Ross, I've provided a link in the description below which has his latest appearance on BNN. Well, we've had a pretty tumultuous week in stocks this week. We're going to take a look at the 6 FANG stocks and we're going to see where we think they're going and whether we can see a breakout or a breakdown.
Okay, so before I get started with the FANG analysis, I'm just going to show some new clients how to get onto it. So this is our website, strategicanalysis.ca, and you can see here's Ross and Chris. And if you scroll all the way down to the bottom, like Ross explained in BNN, you can see last week's FANG Friday video, which is right here. If you want to see the who we are, what is SVA, our blog, services and the pricing, it's all over here. Phone numbers right up here, and if you are already signed up, you can click here where it says client login, and it will take you to the client website where we have notes, we have our insights, we have our recent recommendations, and our daily notes on individual stocks. And here's where you would type in your stock. For us here, we have Facebook. Click on it, and that takes us right to the SVA chart. So I'm going to go ahead and open up the chart, and we'll just start our analysis. I'm just going to format things here. Okay, so here we have a better look at Facebook, which is our first FANG, and you can see that this price is actually reflective of Thursday's closing price, because the calculations that we do to create these charts have to be done at night when our clients are not using the website, because they are very rigorous and in-depth calculations, and otherwise if we did it during the day, clients wouldn't have access to it. So if we look at the charts right here, what we can see is this is the 2-year chart. These are breakpoints. Now these lines represent significant points based on our calculations, and that is how we take a look at these charts and how we look at the parameters of stock prices. And as you can see, that they are rather significant here. The bubble price, which is the very significant price for SVA, which is structural valuation analysis, is right here, and you can see that this is where Facebook peaked last year. I mean, right at the point. And also the MSG price, which is this price right here. This is where it found a little bit of support, and it paused on its way down here as well. It hit the LSG price, and it dipped right through it, because this is what we would call sloppy trading, or what I personally like to call a momentum-fueled overshoot, where the momentum to the downside is so strong that it actually breaks through these breakpoints, which typically contain the price. So we can see this dotted line, which is the fair market value line, which is a rigorous calculation that we do based on forward earnings from the analysts. And we can see that oftentimes price does move above it. However, eventually it does come down to it. And over the long term, if you've watched these videos and you've listened to Ross, you can know that what happens is after a market cycle, these stocks always come down to their fair market value price, and that's what it did in December, and it looks like that's what's happening now. But let's take a closer look actually at what's happening, and this is the 2-year chart. So we're going to take a closer look at the 6-month chart, and we can see that what happened here is the stock broke above the MSG price after banging on top of it for quite some time. It finally did break above, and then we had this earnings report which really got it up there. It did spend some time above the MSG price. However, it started to curl back down, and then earlier this week it dropped through, which is what Ross had said last week. Now, it didn't hit the LSG breakpoint here, which would have been a good support. However, it did bounce off of it, and what this tells us is that we remain cautious. Ross did advise caution with regards to Facebook before it dropped down, and we continue to be cautious here, because we can see this stock possibly getting back up to its MSG price, and it did do very well today, despite the fact that we don't have the price added into it right now. It did do very well. However, based on what we're looking at here, we remain cautious because if it does get up to the MSG price, we would see that as a rather opportune selling point. And so what we're looking for more before we buy is a check back to the fair market value line, which would be around the LSG price down here at 150. Taking a look at Apple, this is the 2-year chart of Apple. Now we saw this peak here, and we saw another peak earlier this year, and it peaked around May. The stock, it typically doesn't, if we look at the 10-year chart, which is a very important chart, we can see that the price of Apple generally doesn't go above the MSG price. In fact, the only time it did break above the MSG price is when we had the significant increase in share buybacks over the past 2 years. And the stock actually was able to go above its fair market value line, which is something that really doesn't happen very often with Apple, and also above the bubble price. And the last time that it did go above the bubble price was, if we can take a look here, was at the peak of 2008, 2007. So similarly, if we look here, we saw that it did break above the bubble price, came back down, hit it again, and then it went all the way back down to the SG price. Now, if we go back to the 2-year and we look at that, we can't even see the SG price right here because that's how far it is. So if we compare the current situation to 2008, similar thing happened. We broke above the bubble price, came back down, broke above it again, and then eventually went down to the SG price. Now, Apple's a great stock to trade. However, many people consider it to be a long-term hold. That's possible. However, right now we're very cautious given the fact that it has broken above the bubble price and failed to stay there twice, something that is very ominous given the fact last time it did that was during the 2008 market peak. So longer term, we're expecting this stock to check back to the SG price, which based on the balance sheet is just below $100. And we don't think that that's unreasonable. So if you're holding Apple, the real question is what more upside potential do you think there is with this stock? Are you confident with continued expansion, with continued product growth? Or is Apple going to be one of the victims of the trade war as its last remaining growth market, China, starts to see it as a symbol of United States power and maybe starts to turn away from it? Amazon looks good to us. It hit the HB3 price, which is just about 15 times book value during the sell-off in Q4. It cut through it through what I would describe as a momentum-fueled overshoot. Was able to come back above it, back on side. You can see here it tested it a few times, but was able to continue and rally. However, it wasn't able to get to its next breakpoint, the HB4. And once we start to see it turn over, we advised clients and we advised many people that this is really where you want to be cautious. Now, right now, it's still holding the HB3 price. And after today, on Friday, it did rally quite a bit. And so we're looking at this as a stock that could continue to rally. However, we remain cautious until we see continued tests and successful tests and defenses of this HB3 line, at which point we could see the stock continue higher. However, if this line were to break, the next level is the HB2, which represents somewhat 20% downside from here. We still like Amazon, however, we are cautious. Now, NVDA is a stock that Ross has been calling almost perfectly for the last year. As soon as it broke through its HB3 price here, a price that had been defended for many years, if we actually go back here to the 5-year chart, we can see that this stock was on quite a tear, and it just broke through break point after break point after break point until it got to the HB3, and it found resistance at the HB4 here. And once it broke through the HB3, Ross gave a caution, and it went all the way back down to the bubble price. Now we can change the metrics here, and you can see that it hit the bubble price. Oops. We can see that it hit the bubble price, and kind of hit it again, It got above the HB1 price, but wasn't able to get to the HB2. And as soon as we saw that, we cautioned that it was going to check back at least to the HB1 and possibly to the BB price, which is the bubble price. Ross was very adamant that we were going to get back there, and that's almost exactly where we got to, within about a few dollars of that, and now we've checked back. We don't think that this is a long-term buying opportunity. However, NVDA was able to get some good gains over the past few days, and we think that this is going to be a stock that you can trade in the similar way that it was traded around the sell-off and around the bottoms of Q4. NVIDIA continues to be a stock that we think is going to come back down, even despite the fact that it is down 50% from its highs. And the reason for that is if you look at the long-term chart, the last time we had a market correction, we saw it move from 35 down to 8. And during the dot-com bubble, we saw it move from 18 all the way down to $2. So this is a stock that moving all the way back down to its G price, which seems to be the stable area for this stock. Price level of 34 long-term might be something that can happen. And we're going to keep an eye on it. However, we are not looking at this as a long-term buy or hold. It is something that can be traded. However, you have to be very nimble with this stock. Netflix is a stock that Ross called almost perfectly. We saw after this massive rally, after the Q4 sell-off, it came right back up to its HB5, and it kept trying to break through it, but it just absolutely couldn't. Since then, it's fell back down. And while it didn't hit the HB4 price exactly, it did somewhat bounce off of it. If we were to check back up to the HB5 price, we would consider that to be another shorting or selling area, given the fact that it hasn't been able to break through. And the FANGs, if you look at them long term, especially Netflix, you can see that it gets to this area and then it just kind of collapses. And that's, it's not generally what we're expecting. However, it is something that we think is a very, very real possibility, given the fact that if we go back even further, we can see that Netflix does have these rises and falls, rises and falls, rises. The current rises is rather protracted, and we think that the fall may be protracted as well. And Google is one stock that looks to be rather promising. Here we have the 2-year chart, and we can see that the stock just went above the LSG price. And after the poor earnings report, it started to fall off and has continued to fall off and has moved all the way back down just north of the SG price. We wouldn't be surprised if it touches the SG price. However, given the way that the stock does behave, we think that it may do what NVIDIA did and start a reversal just shy of the SG price. This might be a good area to come in for a nice swing trade. Longer term, Google does look to be one of the most healthy FANG stocks, as it has stayed within this channel, the SG price and the LSG price generally, for a very long time, which is just a 3.66 price to book as of now. The balance sheet continues to grow. The company continues to do well. However, there are some black swan events like antitrust issues that may arise and that may push the stock down. However, given the current trend, we think that of all the FANGs, this is likely the best stock. The SG price looks like a good area to buy if you are looking for a place to buy, and so therefore Alphabet looks like pick the best one of the bunch.
Well, that was the FANGs this week. A reminder that our clients have access to over 3,500 of these SVA charts for all different types of North American securities publicly traded. If you want to learn more about the SVA method, you can go to our website, strategicanalysis.ca. Next week, Ross will be back, and he'll be providing his in-depth analysis to all viewers. Until then, this is Gilbert Ananajor reminding you that nothing, including investing, is difficult if you have the right tools. See you next time.